protection gap in India is way larger than we all imagine. And the reason I say that is a large part of the insurance so-called penetration in India is being done on savings products. So really, if you knock off the savings products, which make a bulk of insurance to GDP kind of penetration number happen, we will actually see that the numbers are even lower than what it is. And I'm not even talking about Bharat, so to speak, even in the metros. Having said that, I think from the 3-4 different aspects on which technology or insurtechs or people with a technologically oriented perspective to the business can really help this situation. First is just trying to sell at the most basic level is just trying to sell the right product. The problem is with some of the products that are actually good for users from a protection standpoint don't have enough margins for physical distributors to sell. The incentives are poorly aligned. And that becomes the first area where if you could take a product like term insurance, which is shockingly just a $700-800 million market in India annually. So the first thing is the technology just reducing the cost of delivery and disintermediating that physical agent who maybe is today not interested in selling that product is because of margins. I think that's one of the most simplest areas where technology will start playing a role for products that are not viable to be sold through a physical distribution network. Second, I think in terms of product innovation, one of the other things is we're a low trust society. People already have a little bit of a negative perception about insurance, not just in India, all over the world, that claims are problematic. I don't know what I'm paying for, and and so on and so forth. So I think one of the things that at least Acko's learned is that people are okay to ladder up. So when you do small stuff, which is give them some small accident insurance or give them something for their phone, and they realize the value that I could replace the screen, of my phone for 5,000-6,000 rupees, and my claim actually came through. They start building some sort of trust with the ecosystem itself. And that kind of laddering up is where I think manufacturing or product innovation kind of comes in, because you may not be able to get, family in India who's kind of coming up in terms of consumption to, they'll start trying to save money first. They will start trying to build wealth first, say for their daughter's marriage or whatever it is, but it may not be, the insurance may not be the first thing that they do. And for that, half of it, I believe, is, at least personally believe, is trust deficit. So product innovation on smaller products which have immediate ROI to them kind of help build trust in the ecosystem to ladder up to the larger products. Two more points I think I want to add here. The other thing is that wherever you look at it in the globe, it's not like physical intermediation goes away. Okay, even a market like the US today is probably 30-40% online, but the rest of it is still kind of a face-to-face or some sort of a consultative interaction. On that front, I think today we just all the intermediation that is there today is largely done in the top maybe 50 cities or at best, and then it's much lower. So we are seeing models in India where you are now trying to get more people into the workforce to try and educate customers about insurance, or look at this as their way of earning income, which is to educate customers on insurance and sell them insurance. I'd take an example of social selling, or in some sense, where you are able to recruit agents, if I may call it that, digitally, and create a network, which was not possible earlier. If you look at it, you had to set up a branch, then you put up people, and that structure was not cost effective. There's another role that I see technology playing. I think the third area that I just wanted to talk about is that physical intermediation or some sort of consultative selling is not going to go away. Even in larger or more evolved markets, we still see a significant portion, 50% plus, being done consultatively in person. But the challenge in doing that is it's very expensive to build this network of sellers or agents who can look at this as a career in tier 3 cities or towns and so on and so forth. It's difficult and expensive to set up those branches and people and so on and so forth. So we are already seeing some companies in India. I think they'll explode at some point where digitally recruiting agents, training them on the app itself, getting them to understand what this is, and then helping their own communities is something that technology can do. It's hard, but at least on paper, it's possible, today. Uh, the last bit on the penetration piece I'd like to say is that the government is playing a huge role, and I think they'll continue to create that, UPI like infrastructure. Even for insurance, lots of exciting stuff is happening. Some of this can be like deeply accelerated with the government's role. They're trying to create a national health claims exchange where the health claims or health record data could move for insurance claims more seamlessly. They're trying to create a product for families in tier three towns, or which is an all-in-one protection product: your health, your life, your home. Just a simple one thing to buy. So and try and get some of these pieces on a platform in a way that these are standardized products. So I think all of these, a little bit of government intervention, physical intermediation getting created more digitally, uh, product innovation in terms of smaller products kind of helping customers ladder up, and in the first place selling the right products. I think these, a combination of all these, I believe will, and in all of these, technology is going to play a huge role.